Thanks for tuning into Countdown right here on BloombergQuint with me, Neeraj Shah, and Devina as well as Navneet. And it's not looking a very pretty picture. So let's quickly jump to what the markets are doing. And the world markets, by the way, are under a bit of pressure. Before I talk about our markets, just see what Europe is doing, down 3.5% odd. So those markets are under a bit of pressure today. And after correcting in trade yesterday, the US futures are pointing towards about a 600-700 point drop. So that's nearly 2.5-3% for the US Dow futures as well. So it's not looking very pretty for the world markets. And this is after the White House officially gives a warning for the number of deaths that will happen in the US. So I think it's impacting the market sentiment in the session today. And I think our markets are getting a lot more impacted simply because we have a holiday. And I don't think tomorrow that is. And not too many people would be wanting to go home with some positions which might get altered significantly in a day's holiday. So I would presume that the risk averseness would be even higher. But having said that, let's just quickly look at what's moving and what's not. I'll make it quick. On the index, there's no point in trying to figure out what is not getting beaten now, because save for a couple of two-wheeler auto names, which is Hero MotoCorp and Bajaj Auto, which are in the green, almost everything else is being taken to the cleaners. So Kotak Bank, because of some specific news as well, the clarification that came in Kotak and the MSCI release that came in means the inflows or the potential inflows into Kotak, and we'll talk about that a bit later on, but that doesn't happen. And 9.5% lower, 10% lower for Kotak Bank, and stayed this way for better part of the trading day today. There is weakness in Tech Mahindra, there is weakness in Bharti Airtel, there is weakness in Shree Cement, weakness in Infosys. So a clutch of these names, which are not necessarily just banking names, are correcting. And then very quickly look at the Bank Nifty too, down about 5.3%, led predominantly by Kotak Bank, but stocks like SBI, Axis, HDFC, almost everything has gone off. So a lot of stocks losing out, and well, not surprised really. I mean, I would pin this down also on the fact that we have an off day tomorrow when the world markets could actually fall more, and maybe traders just want to price that in. Good afternoon, Devina. It's not looking pretty.
It's not, Neeraj, and that's the unfortunate part. We are seeing day in and day out the spikes that come in and the move that brings the index back to levels of closer to 8,500 almost always gets sold into. Today's session, you already highlighted the global picture, but I just want to add in the Dow and the S&P futures as well, which are trading lower in the session by about 3.8% for the S&P futures. Dow futures trading lower by about 3.2%. Coming to the mid caps and small caps, there is this tinge of outperformance that you're seeing within the broader market space today. The breadth of the market also, there's not much of a divergence. So 704 stocks are advancing, 822 stocks which are trading in the red. So the divergence is not too large. But individual stocks and the stocks that have declined quite heavily. So you've got your auto sales numbers coming out, disappointing numbers from Escorts, and across the board, be it Ashok Leyland, be it Escorts, be it Maruti that have reported numbers. Yash will join us to talk about that. But look at the kind of crashing that Escorts has got. It's down about 12%. Then you've got a stock like JSPL, which is down 20%. PVR is down 10%. Remember, both the exhibitors, PVR and Inox, there are media reports suggesting that they may, want to not pay the rent, calling it act of God, and therefore not being able to pay the rent for the property. Kotak Mahindra Bank, you already spoke about. Igarshi is down about 16%. Then you've got a Bharat Electronics, Gujarat Pipavav, Chola Fin, which is continuously moving lower in today's session too. Seat is down. You've got Interglobe Aviation 6% down, 995 on that stock. TVS Motors down 7%. The Cummins India, Aurobindo, Jubilant FoodWorks, everything is down in the session. Stocks are quite heavy actually. On the gaining end, Soba is up about 10%. Shree Infra is up about 10%. You've got the likes of Sonata Software, smaller names there. Yes Bank today has moved up. So in the morning session, it was at 20 rupees. From there, intraday, the stock has moved up and it's come to 23 rupees now. Delta Corp is up. Gayatri Projects, Lakshmi Vilas Bank. So some of the earlier beaten down names are doing relatively okay for themselves this afternoon. But also important to keep in mind what's been happening on the India wick. Watch out for that. And also the futures and options space and the more liquid market. What does that indicate? Navneet, good afternoon.
Good afternoon, Divina. Considering this is a truncated week and Thursday being a holiday, so it's an important day because you've got the weekly options expiry, which will take place today. One would have expected the volatility to be higher in the last hour of trade, but I think the entire session has been volatile. But remember, VIX is determined by option prices, and that has been cooling off after tumbling 10% yesterday. It's down another 5% even in today's trading session. But looking at Nifty futures, yes, there are signs of fresh positions being taken. Remember, yesterday's rally was an account of short covering in both Nifty and Bank Nifty, where open interest shedding was seen. But as of now, Nifty futures have also slipped into a discount versus premium, and there is addition of about 10 to 12%. But I think there are more, positions being taken on Nifty Bank futures. Open interest is up over 20% as we speak, and this one particularly has been trading at a discount. So keep an eye on Nifty Bank, and banking stocks have been in focus. But since it's the weekly options expiry day, what range you can expect in terms of active option strikes today? Throughout the session, of course, there are some signs of protecting lower levels of 8,000, 8,100. So you've got the 8,100 put, which is added about 11 lakh shares, 8,200 mark, which got breached briefly just a while back. That too has added about 13 lakh shares. And on the call side, you've got the 8,300 strike, where maximum OI addition of almost 22.5 lakh shares have been seen. So looking at the options data, my sense is expiry will take place in that range of 8,150 to about 8,250, or maybe max 8,300 on the upside if there is any recovery, which is there today. And talking about individual stock futures, you've got Kotak Mahindra. Remember, it's locked in lower circuit. I know it's an F&O stock, but remember, all the F&O stocks also have a circuit of about 15 minutes and also some conditions which have to be met on the cash side. I've been watching the counter for the last an hour and a half. It's still down about 10%. Yes, there are fresh short positions being seen as the open interest has gone up there. But particularly watch out for JSPL, which Devina highlighted, and it's fallen about 20%. This one, once again, is locked in lower circuit. Remember, 10%, 15, 20, these are the limits for the F&O stock also, where they circuit for 15 minutes every time they hit these levels. On the open interest side, there are significant amount of positions seen on the short side. It's also touched 52-week mark today, and open interest has surged about 42%. The other stock which has touched 52-week low mark is Cummins, which is down, trading, I think, with cuts about 5 to 6%, and open interest there too has surged, indicating there are fresh short positions. Yes, for today, of course, we're watching out. Maybe 8,200 can get protected. That remains to be seen. But Neeraj, I think for a longer term, for the monthly expiry, 8,000 remains a key mark. And if that gets breached, of course, we'll be watching out for March series low of 7,500.
I think the lows have stopped having some meaning, isn't it? To just look at the kind of cuts that have happened, some of the metal names as well. I'm sure we marked JSPL, but just wanted to point that out again. 21% down now, trading at the lowest point of the day. Gurmeet Chadda of Complete Circle Johnson right now with his show. Gurmeet, thanks so much for joining in. One step higher and then one step forward, two step backwards. That seems to be the order of the day right now. Is it prudent, Gurmeet? For example, if you look at banking, let's say, is it prudent to just sit on the sidelines and not be in a hurry to buy an HDFC Bank, Kotak Bank, maybe a Bajaj Finance, quality franchisees, but you don't know what will happen next?
Neeraj, you're right. I think the Bank Nifty is actually the trouble spot, and I think we even saw that even yesterday when the market was about to close, we saw some profit taking towards the end, and considering the weightage it has, obviously makes the move stronger. But my particular opinion is that in this kind of crisis, you got to look for survivors. And I think the survivors will be the winners going forward. So I don't see an existential threat for an HDFC or a Kotak or a Bajaj. And so there are two sets of actions you can do. You can choose not to dial any risk in banking stocks and stay on the sidelines. And the better strategy, in my view, is to be patient and keep adding them on every 5-10% moves, which are in fact now almost happening on a daily basis. You see, until there is a crisis, you will not get them 50-60% cheap. We saw Mr. Puri's interview where he spoke about 5 billion being in cash, and mind you, we are seeing a big run on deposits on a lot of banks. IndusInd said that they lost about 11% of deposits. A lot of regional banks, in terms of my interaction with a lot of colleagues who are in various banks, are seeing some stress on the liability side, and there is a migration to safety. So you have to keep looking at the banks which will weather this and we'll be able to restart, I would say lending or overall operations to the, at the earliest. And, so I do a lot of transactions for clients in terms of doing mutual fund transactions or making them, do trades. I think the sense I get is that, and this is a, very elementary thing to talk about here, is that with banking relationships being more with the HDFC, ICICI and Kotak, it's easier to do transactions vis-a-vis some of the other banks. So my view is that you keep accumulating them with every fall. Difficult to call a bottom, almost impossible to call a bottom when you see 7-8% kind of moves. But the top three guys, I think, will survive. I don't think so there is an existential crisis. And you got to look 1 year, 18 months ahead. Don't look at 3-4 weeks, 6 weeks from now.
Queries on two of those names. I have one, Bajaj Finance. Gurmeet, a 20% ROE business traded at 9 times, yes, unacceptable. It's now trading at what, 3 times or 2.5 times book, but we do not know what the book would be. Would you take the plunge?
I personally, I have been needed with that disclaimer. I've been actually, a holder for Bajaj Finance for the last 6-7 years as an investor personally, and also been advising clients. I think also a pertinent ratio to look at is the PEG. I think it's fallen below 1 now. And I think, so there is a concern on how the consumer loan book will shape up since there is a lockdown, a large part of the disbursement will get impacted. But I think it's a very quality franchise. I think their risk assessment, the kind of book they have now, and on that book growing at that pace when things were normal, and keeping NPAs, sub 1% is quite commendable. So I think you should keep adding it on dips, and sub 2,000 could be something where you would like to probably, do a larger tranche. But above that, maybe you can keep nibbling with some small quantities.
All right. That is Bajaj Finance that Gurmeet just spoke about. So looking at the PEG ratio up there. Bringing in Ruchit as well in this discussion to take us through his views on what the fundamental end of the business looks like. Ruchit? What the technical side of the business looks like. Let's talk about the index levels right now. On the Nifty per se, the levels that you're watching out for, Ruchit?
Yeah, hi, very good afternoon. And since last 4 trading sessions, we have been seeing some volatility within a range, whereas on the lower side, 8,100, 8,000 has been acting as a support. And on the higher side, 8,700 kind of levels are the resistances. So we are expecting this range-bound activity to continue, but definitely the volatility within this range is quite high. And we can clearly see alternate bouts of buying and selling where one day the market is going up and on the second day the market is again correcting. So I think as of now, 8,100 to 8,000 is the support range that we are watching out for. And on the higher side, 8,700 continues to be the resistance. So next set of directional moves could be said that, either if we get a breakdown below 8,000 again or a breakout above 8,700, then we could see the next directional move. But one thing is certain that, the banking space has been witnessing, a good amount of underperformance in the last few days. Even if you see that when the markets were correcting, the bank Nifty was correcting more than what the Nifty was correcting. And yesterday, when we had seen the pullback move in the broader markets, that pullback was supported more by defensive names such as HUL or you might say the FMCG PEG or the Pharma space. But the banking is not participating even during the pullback move. So I think Bank Nifty remains the weakest link, and until we see any buying emerging in this banking space, a market is not going to run up very significantly. 18,000 is the crucial support for Bank Nifty, and if we see the index going below 18,000, then probably 17,000, 17,200 range could be visited again.
$18,000 remains a key level for Nifty Bank. Richard, very quickly, you want to take us through your individual stock strategies as well?
Yeah, I have a couple of recommendations, one on the buy side and one on the sell side. On the sell side, we are recommending to go short on DLF. Probably just a pullback move was seen in last few trading sessions, and the pullback move was along with very lower volumes. So usually whenever we see price up move with low volumes in a downtrend, those stocks generally get sell off very soon when the market's correct. So with a stop loss above 139, one can go short on DLF futures, expecting near-term targets around 118, 119 again. And Cadila Healthcare within the pharma space is one of the stock which has been showing outperformance in this falling market. And as a defensive, I think Cadila would continue to show this outperformance. So Cadila Healthcare is one name which one can go fresh longs on with stop loss below 252 for targets around 290.
Okay. Those are some individual stock ideas coming in from Richard Jain. Remains to be seen where the closing comes. But as he highlighted, of course, 18,000 is a key level to be monitored on Nifty Bank. And yep, we've been discussing Kotak Mahindra Bank. It is one of the top contributors on the downside, I think, on both Nifty as well as Nifty Bank for the day. There was some development seen, and not just for Kotak Mahindra Bank. I think just one of the reasons why markets are trading weak is because of the MSCI announcement. I'll just take you through that, where they've highlighted in the press release, they've deferred the implementation of revision of foreign limits for Indian stock, and this deferment is up till May review, and the final decision MSCI will be taking, that will be before 30th of June. And just to give you a background of this, Ministry of Finance, they'd come out with a circular last year in October, where they had raised FPI limit with effect from today, that's April 1st, 2020. So the street was anticipating that MSCI will include more stocks and there will be more flows coming into the Indian equities. But that did not happen because of this deferment. And the circular also stated that the FPI limit on sectoral foreign limit could be increased. So now what they've said in the release, MSCI, they've said that it will continue to include the depository receipts as of now, how they've been doing it to calculate the foreign ownership limit, and they've also maintained the current foreign ownership limit, which is there for all the Indian equities. And of course, as I highlighted, they will be updating on the implementation of the circular by June 2020. What is the impact of this development? And we've been talking about it. Kotak Mahindra Bank, remember, so far it is not in the MSCI index, so the street was expecting Kotak Mahindra Bank to make its debut in the MSCI, and that has been deferred. And I was speaking to a couple of brokerages. They said they were implying nearly 6% weightage that would have gone to Kotak if it was included in MSCI, which would have actually meant approximately $2 billion of buying coming in just because of the entry of Kotak Mahindra Bank. And other likely inclusions were also, and this is something we've been discussing in the past as well, stocks like Tata Consumer, also something like Biocon and IGL. So this is one of the reasons, this is external reason. Gurmeet, I want to come to you. I know we've discussed about financials and a couple of banking stocks, but particularly for Kotak. Now today's fall is external, but also there were some highlights which came from the conference call where they've said that they expect slippages to rise, if the lockdown extends to, let's say, from 1 month to 3 months. But I think most important takeaway, Gurmeet, this has been a conservative bank. They've said the focus going ahead will be on balance sheet and not on profit and loss statement, which essentially means that they want to reduce the leverage going ahead, and how they can do it by lending less maybe to riskier institutions. Your comment on that, do you think it's the right approach at this point of time?
Yeah, Navneet, it is, and I think you can trust Uday Kotak to, lead the bank through the crisis in times like these. I think the reprieve they got even from the stock got a bit of a relief initially when they had this issue with RBI on the promoter stake, which was a bit of an overhang, sorted. My sense is, purely on balance sheet, I think a very comforting balance sheet. It's been one of the most consistent performers over years, and if you see the return ratios and the margin profile, the bank credit growth, the kind of a cautious approach they took in last 1 or 2 years within their corporate SME and the unsecured retail segment, I think it was to me it was very proactive. Even the subsidiaries, if you see, whether it is life insurance, the mutual fund is already talking of 2 lakh crores of assets now. It's obviously both of them are unlisted. They also continue to do well. So I'm saying overall on return ratios, on subsidiaries, on core performance, I don't see an issue in terms of which I was selling Neeraj on existential crisis. But yeah, it was trading at rich valuations, and in an environment like this, and that's what I think it's a learning and a humbling experience for portfolio managers and even advisors, including us, is that growth at any price is something the market reminds you once in a few years should not be chased. And I think it's that alignment happening right now. I don't see any stress with, but in terms of pecking order, as I said, I would be happy picking up HDFC, ICICI, and Bajaj Finance right now, and maybe wait for adding others, maybe sub 1,000, sub 900 levels for Kotak in terms of accumulating it.
Quite contrary to what some of the other names are doing, Hero MotoCorp is the top gainer. Marginal gains about 1.8%, but still in the green, and Bajaj Auto follows suit in the green as well. So that's about 0.5%, 2,033 on a Bajaj Auto. But the likes of TVS Motors, Escorts, Ashok Leyland, these are Ashok Leyland any which ways. Remember the entire Hinduja group that got beaten together. Ashok Leyland, and its investment into its financial arm that got eyeballs rolling, and therefore the entire selling pressure built up into the stock. But do you see any sort of a technical bounce, Ruchit, now for some of these names, likely Ashok Leyland, and then maybe an Escorts added?
Yeah, I think if you see in this fall when most of the auto names have corrected, Escorts has been one stock which relatively have shown some outperformance in the fall compared to other stocks which was much less. Now 520, 530 is the range where the stock has now formed a short-term support base, and until this base is intact, I think we would see the stock showing some consolidation before again resuming some positive momentum. But apart from Escorts, the other auto stocks have not shown any kind of good volumes when the prices are moving high. So I think auto space as a whole, one at least if one is a short to medium term trader, then one can look to avoid until we get some higher top, higher bottom structure again coming in. Even if you see when the markets are showing some sort of pullback move, auto, banking, real estate, these metals, these are some of the sectors which are not participating in the pullback moves. So I think the underperformance is likely to continue in these sectors. Where the pullback moves are, if you can see, Pharma is there, FMCG is there. To an extent, some of the IT names from the large cap space have seen good volumes, and the markets are showing some pullback. So I think it's the time where whenever the markets are going up, the defensive would show some outperformance. So I think the space like auto could be avoided at least from short to medium term as of now.
Okay, space like auto can be avoided according to Ruchit. But since we're on the topic of auto and we've been started getting the March auto sales numbers, a real disappointment of sorts. Let me bring in Yash Upadhyay. He's joining us right now on the phone line. Yash, quickly, if you could run us through, some numbers that have come out and what are they indicative of?
Good afternoon, Devina. So before I start, just a small disclaimer: the sales figures for the month of March 2020 would not be comparable on a like-to-like basis, primarily because all of these companies have had to take a production shutdown last month on account of the nationwide lockdown. Having said that, Maruti Suzuki reported a 47% drop in its year-on-year sales, coming in at a little under 84,000 units versus the expectation of roughly around 100,000 units for this month. It was largely down to the slow weakness in the domestic sales, which were again down by 46%, and we've seen slowdown across all of the categories. Moving forward, when it comes to Ashok Leyland, again, we've seen a big drop here, 90% on a year-on-year basis to somewhere around 2,200 units. Versus the expectation of 6,200 units. Both the MSCI as well as the LCV sales were down by as much as 89 to 94%. And lastly, Escorts was the only other company that reported their monthly sales numbers. And their sales were down by as much as 54% to 5,400 units versus the expectation of 8,000. So overall, these companies have seen a big drop in sales on account of the production shutdown, and it is expected that the month of April too is likely to see such big drops because the lockdown is officially expected to go on till the 14th of April, and I guess that is something that the markets are factoring in right now because most of these names, although they have corrected significantly from their peaks, are still under pressure in today's day trade. Ashok Leyland down about 5%, Escorts down more than 10%, as well as the likes of TVS Motors, Tata Motors, as well as M&M. Back to you.
Thanks very much for that. Those are the auto sales numbers there. Few of them have come out, but not painting a very pretty picture. And in times to come as well, production shutdown could extend itself, and therefore not comparable. I want to talk about PVR for one. Ruchit, are you tracking PVR at 1,050 half now? I mean, obviously, business is at a halt. There is no clarity on when you will see people going back into cinema halls, into crowded spaces. They've also now started to look at the possibility of laying down act of God and saying that it's not possible for them to sit and pay rent for all the properties. But just purely from a price point of view, would you look at a PVR or an INO?
No, I think I'll wait for some more correction. Primarily, if you see when we saw that lockdowns came into a country, PVR was one of the stock which had seen very sharp correction from the higher levels. Now, what has happened during last week when when the exchange came out with a circular regarding some short positions that that 50% of the market-wide positions would come into ban period. That was on the first day itself, PVR was in the ban period. So during last expiry, we saw that on last 2 or 3 trading sessions, there was short covering move. Due to that, the prices went higher from the low of around 1100 to 1400. But we have not seen any kind of sustained buying coming in there. In the new series, again the stock prices have started going down, and we can clearly see formation of fresh short positions again now. So I think this underperformance is likely to continue technically going ahead. 870, 880 also I think could be seen in near term. Even today, the volumes on the selling are relatively higher. So one should look to avoid bottom fishing over here. I think in such stocks which have been showing very higher volatility on the back of this news, I think even if you are a medium to long term investors, you should not be worried to buy a bit expensive. But you should not be even ready to catch a falling knife.
Is it indeed a falling knife? My question, well, it certainly looks like it, but the point is, it's one of those few businesses where we know that there is a moat around the business in terms of entry barriers. There's almost no prizes in guessing that there's no third player that is going to come in a meaningful way to disrupt this. Even if you assume FY21 as a washout year of earnings, are the prices baking that in already? Or do you think fundamentally the prices are still some way to go?
Hello, Dheeraj, is it for me?
Yeah, Gurmeet, that's for you. On PVR,
sorry. Yeah. So, Neeraj, I think, I would tend to wait. I agree there is when you get PVR at 1,000 rupees at maybe 55-60% cheaper, obviously, the, valuations make it attractive. Looking at the balance sheet, there is a debt of about 1,200-1,300 crores. There isn't right now enough cash for the last quarter. I don't have the latest balance sheet as such, but, and there were plans of about 90 screens addition this year, obviously, which now, nobody has an idea in terms. Obviously, they will not be anywhere close to it. The last quarter numbers are very good, largely led by, good performances, good box office collections, from movies like War, Houseful 4, and Good News, etc. And the Hollywood collections. I think the regional language which got declined. It in fact managed to also have ad revenues up, by 5-6%. So I agree with you. Great mode, everything good around it. Almost a duopoly business now. There is a scope of conversion of single screen into multiplexes. We still have about 40-45% single screens in India in terms of the overall screens. So great long-term story, but one has to be watchful for the next 2 months. But if it corrects maybe 15-20% more from here, I think that's probably a better time to. So anything related to mobility right now, and whether it's aviation or multiplex operators or hotel, I think it's very difficult to take a call, even if the valuations are very, very attractive.
I just and complete credence to what Gurmeet and Ruchita are saying. So obviously, don't doubt that. But the other one, which is Inox Leisure, just want to put out some numbers to our viewers before we get in, Sharat, for the Fab 4 stocks of the day. Inox was anticipated to do, after a 13 rupees EPS, which I think they will easily clock in for this the financial year, which ended yesterday. They were anticipated that they would do about 22 rupees. That was the kind of growth that was being factored in. Now, with the presumption that the entire year is gone away, you have a 13 rupee EPS for FY21 assumption right now. And assuming that normalcy comes in, you probably have an EPS anywhere between 18 to 22. So on a FY22 basis, Inox Leisure at the current prices that it is trading at is, well, less than 15 times, I think less than it has ever traded in the last 6 to 7 or 8 years. So motor on the business, balance sheet much healthier than PVRs. And certainly, yes, the number 2 player, but not a small player by any stretch of imagination. Interesting value. The timing of the entry, as both our experts suggested, could be very different. So please do your own due diligence. Okay. Before we thank our guests, maybe we get a view on theirs on some of the other stocks as well, which are moving around today. Let's get in Sharat Dubey, who joins us with the Fab 4 stocks of the day. Sharat, good afternoon.
Good afternoon, Neeraj. The first stock I've picked up is Subrajit Engineering, which is stock is up locked in upper circuit of 10%, snapping its 3-day losing streak. So yesterday it was reported in the bulk deals that HDFC Mutual Fund had acquired 30 lakh shares. That's roughly almost 2.1.4% of the share capital. And the seller was National Westminster Bank for the same amount of shares. The deal happened at almost 113.5 rupees. Up next, we are having Bicon. The stock was up almost 3% after its insulin manufacturing facility in Malaysia received an EIR from US FDA with voluntary action initiated classification. The inspection stands closed, and this will also pave way for the insulin glargine approval in United States. Up next, we are also having SpiceJet, which is locked an upper circuit of 5% after the company stated in its press release that it has implemented pay cuts for its employees. The CMD Ajay Singh took a 30% pay cut, while the other employees, on the bracket between 10 to 30%, took between the top and the mid-round levels will take a 10 to 30% pay cut. Even the employees in the lowest pay grade will remain unaffected by these decisions. And the last stock of the day is GM Breweries. The stock is up more than 5% today after the company stated that it has received a license to manufacture hand sanitizers from Food and Drug Administration from state of Maharashtra. So this license will be actually valid till June 30th, and the company did state that it will begin the production of hand sanitizers on a commercial basis. Back to you, Neeraj.
Thanks a lot for bringing those FAF4 stocks for the day. I just want to also highlight a couple of Nifty constituents which have fallen quite sharply. Tech Mahindra is your top loser right now on the index. It's down by about 9 to 9.5%. And I just highlighted a while back, remember, F&O stocks are also getting locked in circuit of about 15 minutes. So right now it's down about 10%. So circuit opens after 15 minutes. Richard, come in here very quickly. The 10% fall on Tech Mahindra on the charts, how does it look? Is there more room for downside?
I think last 6 or 7 trading sessions, we have seen some broad range in Tech Mahindra from 480 to 570, and as of now, it continues to trade in that range. So we are not looking any kind of significant directional move over here, but certainly the range also remains quite large. So I think on the lower side, 480, 475 would be the levels that could be tested.
So some key levels to be tracked on Tech Mahindra. Gurmeet, before we thank you, I also want to take your view on the FMCG pack, and especially HUL after touching fresh highs once again today. The stock has cooled off. Today it's down by about 5 to 5.5%, but we have seen good returns at least in the last 7 days or last 1 month at a time when markets were falling. So stocks like Nestle, Colgate, HUL have staged a good recovery in the last few sessions. But my question is today, there's a development as well. They've completed their merger with GSK, and besides completing the merger, some additional news which came by, they've also bought the brand name Horlicks from GSK Global. Of course, they've paid some 3,000 crore of an amount for that, but brokerages were factoring in a 10% EPS if and when the merger goes through, and they were expecting that to happen in this financial year. It's come by. We've got a conference call also at 5 p.m. We'll see what the management has to say about that. But my question is, these stocks which have been doing well, be it HUL, or for that matter, Nestle, Colgate, at every correction, would you advise someone to buy?
So coming to HUL in particular, I think not at this price point, so it will be a hold, and as you rightly said, so you have to look at the portfolio of FMCG companies in greater detail, Navneet. So if you see HUL, the soaps are like 20% of the portfolio, the shampoo segment is another 6-7%, then you have home care and oral care, which is another 10%, and then you have the coffee, the ketchups, and other which part of it. Their skincare business, I think, is in my channel checks is something which is seeing lower volume. So overall, the 60-70% of the portfolio, which is soaps, fabric wash, personal care, moving very well. Britannia again, 78% biscuits. We saw a Nielsen report where the processed foods, the packaged foods, the volume growth has been 40-50%, and another 10% for them is your bread and rusk and other bakery items. So again, 80-85% portfolio, again doing well. Dabur, if you ask me, again, decent portfolio, great combination of, health supplements, OTC, home care and oral care. So I think you have to look at the portfolio in greater detail. I would avoid something like a Marico, where probably the coconut oil is 45-50% of the sales, so that dependency goes up. So in the order on current prices, maybe Britannia and Dabur to look at immediately, and even ITC. I think ITC FMCG and cigarette put together is a sizable part of the business, assuming there is no ban on tobacco. So in my order, it would be, at current price would be Dabur, Britannia and ITC, and maybe HUL and Nestle if you see another 10, 15, 20% correction. HUL, Nestle won't give you 50% correction. If they do, probably that's a time to take leverage and invest then.
These stocks don't give us 50% correction, because these have emerged out to be the bluest of the blue chips that we've seen, at least in the recent crisis. Gurmeet Chadha, thank you so much for joining us today and taking us through your views on the markets. But moving ahead, look for strong business and let go of the weak ones. And that's the word, by the way, which is coming in from Samir Vatak of Sage One Investment Advisors. Amid the coronavirus uncertainty in the market, Vatak says business might go back to normalcy soon, but the valuations, they may take some time to come back to being fairly valued. Listen.
I think I would rather focus on the secured lenders in that space rather than unsecured lending, because almost everyone is equally hit. Definitely that will come back, because I think once this, it's highly possible that we look back at this event as the highest hysteria that we have seen. It may not really turn out to be the risk that we are assuming today. And in that case, a lot of businesses will immediately go back to the normal. The life will go back to normal in a moment. Suddenly if there is a cure which is found, or suddenly a vaccine is found. So I think that's where the FOMO kind of thing, where Devina started with, is coming. But it's important to realize what were extremely overvalued, even if they have come down by 50 or 60% in terms of valuations, those are still expensive, because historically such overvaluations only last for one cycle, and in the next cycle such overvaluation doesn't come back. I'm sure there will be other sectors where you will see such overvaluations, but I think it's better to focus on investments where you see the businesses coming back, as well as the valuations are well below fair valuations, and they just come back to the fair valuation. Not the businesses where they're already come back from overvaluations to fair valuations, and maybe the businesses will come back to normal. I think that's not where you will make extraordinary returns. This is an opportunity of a lifetime where you will be able to identify great businesses which are trading at half or 1/3 of the fair valuation, and it's better to go there rather than bet on someone where it's already just at fair valuation.
Yeah. Right. Samit, the other question would remain is, in times of fear and adversity, that's the time, the brave get rewarded with disproportionate profits. And disproportionate profits is what I'm referring to from a mid-cap and the small-cap side of the market standpoint. They've completely given up the 2017 rally that brought the mid-caps and small-caps to these levels. At any point in time in this correction, did you feel that it was, maybe of value to look within the broader market space? Because sticking to quality is something everybody does. Everybody has spoken about it. Everybody has said that, while you are seeing this correction, there is going to be business continuity. The larger names are not going to run out of business. So therefore, this is just a small blip in the overall growth story for the larger names. But it seems like mid-caps, small caps, where there are good value businesses, are sort of shunned away.
Right. I think that quality list is, by every event is shrinking, by the day. In a matter of 3 weeks, I'm pretty sure there are many businesses which seem quality are out of that quality basket now, and will probably never get back into the quality basket. So I think, this is an opportunity where you get extremely cheap valuation. See, this large cap, small cap, mid cap has been a differentiation mainly in this cycle. It's really never been that differentiation in the previous cycles. It was phenomenon of this cycle mainly because a lot of technical issues, SEBI triggered and all of that. But I think focus on the great businesses. There are so many of these mid-cap and small-cap companies which are in this 2,000 to 10,000 kind of a range, where they are extreme, almost monopolies. They are leaders. The difference between their business compared to the second player is much higher than, say, an Asian Paint and then the second player, or an HDFC Bank and then the second player. So those are the businesses where this crisis has actually triggered collapse of the competition even more than what had happened even before. And those companies, when the economy comes back, they have such a huge opportunity to gain market share, that the growth that they can accomplish would be very, very high. Even if the economy grows at 3% or 4%, their growth rate can easily go beyond 25%. And those are the businesses which are, where you can expect that they will double their earnings in the next 3 years. And at the same time, their valuations, if they double their earnings in those 3 years, will go up 2 or 3x. And that is the opportunity I think one should look for. It is not that often that you get such opportunities to pick the leaders in certain industries. And there are so many of such companies available today.
That's Amit Vartak. You can catch that entire interview on our website as well, on BloombergQuint.com. But you guys have been sending us a whole host of queries, and we have our battery of guests lined up just to answer those queries for you. Gurmeet is here with us. Manav Chopra will be joining us in moments as well. Gurmeet we thank him. So Anand Tandon will be replacing him to answer your queries. But Ruchit is still here with us. I'm going to start the first with a query that's coming in from Amay Joshi. And he has a query. He says, how to play pharma and power stocks. I mean, looking at the fact that every other sector has been beaten down, Ruchit, the pharma as a pocket seems to be the only one that's managing to sail through without any much damage. Do you feel there are good plays within the pharma pocket or in the power sector as well?
Yeah, I think within these both sectors, pharma is one space, which in this correction has shown some resilience. If you see in last 4 or 5 years, pharma index has not given any kind of significant returns to investors. But now, when the broader markets have seen a significant correction, pharma is one space where people are maybe putting their money to take it as a defensive name. Even if you look at some stock-specific ideas, then stocks such as Divi's Lab, Dr. Reddy, any kind of corrections that we have been seen in these stocks at the lower levels, again, good amount of buying seem to be emerging. And the corrections, even in the derivatives segment in these stocks, have not been led by any kind of fresh short formation. It's just long unwinding whenever happens, the stock corrects, and again we see the stock resuming its positive momentum. So I think stock-specific action or stock-specific buying could be done within the pharma space. Dr. Reddy, Divi's Lab, and Cadila Healthcare, these are three names which from a short to medium-term perspective looks quite promising from current levels.
Manav, question to you. Since we're on the topic of pharma, there's another query that has been posted, by Amay only, but he has given names of stocks like Pfizer, Ipca Labs, Alembic Pharma. Quickly, if you have any calls on any of them.
Yes, in fact, looking at the chart for Ipca Lab, in fact, this is one stock which has managed to hold on to its important support levels in spite of such volatility in the markets. I sense this is one stock one should definitely have it in their portfolio for a medium-term to long-term perspective. The support for the stock is placed around the levels of 1250 to 1300. So any dips into the stock should ideally we look for buying opportunity. I sense in the medium-term, long-term, this is one stock from the pharma could definitely continue its outperformance.
All right. Just one last question then. I think, we have time for that. And then we go on to our usual market conversation. A quick view on Tata Elxsi. Ruchit, IT as a pocket, again, not immune to the sell-off. But from the smaller, mid-tier IT basket, how does Tata Elxsi look?
So when we have seen pullback moves, it's only large cap stocks that have been moving higher. The mid caps have not done much in terms of any price up move. So I think one should wait for another decline in the Tata Elxsi. If I look at some of the Elliott wave perspective, there this really seems to be a 5-wave decline, in which we are done with the 4th wave pullback move. The next leg of down move could take the stock towards 480, 460 kind of range. Certainly, it's quite low from current levels, but from medium to long-term perspective, if the stock comes around 480, 500, then the risk-reward ratio would become much favorable to go long over there. But as of now, though the resistance is around 670, until we get a breakout above 670 or 680, one should not do any kind of bottom fishing. I think on the lower levels, 480, 500 could be seen.
Anand, we were just playing around on the Bloomberg terminal. We can do it from home as well, and just trying to put in some queries about companies which have, let's say, a lower debt, great ROC, good growth over the last 5 years, even though the growth may dim down a bit today. And when you look at a list of companies which are sub 5,000 crores market cap, there are a few names which are not necessarily large in size, but doing remarkably well on the business front. GMM Pfaudler was one of those which stood out. There were a couple of other pharma companies. There was one Persistent Systems which stood out. I mean, would you look at such businesses? Because the burn rate of cash is not that high. They have cash on the books. Debt is not there. And they are doing reasonably well under normalized business circumstances, and valuations have come off.
Well, it depends on how long you want to play for. I mean, clearly, whenever the market turns, the first move up will be on the large cap companies. And therefore, one simple way of playing it would be that you actually just buy an index ETF or, one of the better performing index, managed portfolios. Once you get a 10, 15, 20% up move is when you start looking for, looking for specific stocks. And there is no question that the kind of analysis you're talking about will help you, fix up some of the stocks that you may want to own. Do remember that some of these smaller companies suffer from illiquidity in the market. So they may be excellent companies, but if some investor decides to move out, you may have, mark-to-market losses which you may suffer in the interim. So if you're prepared to take that, no reason why you should not be looking at it if your valuation parameters have been achieved.
The other bit is, there is, Anand, my question is, because you've looked at so many market cycles, there is only as much that a stock gets beaten down to before, even if the business case has gotten spoiled a bit, at some point of time, valuations do take center stage. If you agree with this, do you reckon that maybe some of the metal counters, steel companies might be there? I mean, the kind of valuations on normalized basis that they're trading at are similar to what they did probably in the global financial crisis.
Well, yes and no. I mean, first of all, they will not, in my view, be the first sector to recover because you actually need to see demand pick up, and that may take a little while. But that said, as you said, the valuations are low. So you have to make sure that you are buying those which are not, where there is where the debt is still not too high, because most of the steel companies still carry considerable debt on the balance sheet. And, with a few exceptions. And, you may want to pick up only those which have less debt so that in case this shutdown does extend beyond what one is expecting at this stage, then you don't get into a dither. Of course, the government is trying and RBI is trying to make sure that the debt doesn't become onerous in the form of, capitalizing or postponing some of the payments. But at the end of the day, they will have to be paid. So, however, on the same theme, I would argue that there are a large number of comment-run PSUs which have fallen off the cliff. So, they were anyway not particularly fancied. They were grossly underperforming the market even when the market was doing well. And in the current sell-off, they have been sold off equally. So you have a large number of companies which are not going to shut down, where there is an almost definite cash flow, where there is now reasonable dividend yield, which you can be sure will be paid because the government needs the money, and where the valuations are almost mouth-watering. So, some of those, and that's a complete contra play because at this stage, almost nobody will be owning any of them. So I would think that, there may be one possible variant that you may want to look at.
Neeraj, I just want to come in there since you were talking about metal companies. And of course, since, the correction that we've seen across metals, or be it cement, maybe valuations could be a solace. But I just want to particularly point out JSPL. We pulled up this stock even during the F&O check. It fell as much as 20%. I'm just looking at some data points. The promoter shareholding here is nearly about 60%. And Neeraj, out of the 60% holding, they've pledged about 65%. just as of now, going by the internals, the delivery quantity up till 3 p.m., which I can see on the exchange's website, is 1.1 crore, and this is the highest that we've seen in the last 6 months or so for JSPL. I don't know, the fall today, is that a reason for, that lenders are coming out and selling shares? It's touched 52-week low of about 62. Of course, it's recovered from those levels now. It is at 70, but it's a sharp fall that we've seen for JSPL. And of course, companies which are over leveraged, where promoters have pledged their share, stake, and these are the companies where you are seeing maximum amount of carnage coming about. Anand, hi, good afternoon. Just want to come in here. Let me shift to the cement space then, where once again valuations could be a solace, but clearly volumes may not pick up because of subdued economic activity, which may last now in the maybe in the coming 6 to 7 months. Would you take a bet solely on valuation basis? We've also got some marquee companies like Shree Cement also correcting in the recent past.
Well, yes, I think cement is a space where, your likely demand increase may be much faster. And also, since you cannot import the thing because of the kind of weight that it carries, it is easier to make a prediction based on domestic demand rather than what's happening in the rest of the globe. So the short answer is that cement is definitely will be an attractive sector. You have to be just careful about the area that you are buying the cement plant in. Simply because there are 4 or 5 segments in the market, and therefore each one of them have their own demand supply situation. But broadly speaking, some of the leading cement players now have become a lot more value rather than the kind of multiples that they were trading at earlier, and can certainly be looked at this stage.
Okay, we've got Darshan with us. We can go across to him and get a sense how what the dealing rooms have been doing today, considering the 4% fall that we've seen. Hi, Darshan. Thanks a lot for joining. What's the sense you're getting from the dealing room?
Yeah, hi, Navneet. Probably at this point in time, most of the dealing rooms, the very trade things that are going on, not too much info coming. But one of the stocks that's done well today is Hero MotoCorp. It's done extremely well. And one of the key reasons is that dealing rooms did indicate that a couple of buy orders have come in, because the commentary in the conference call was extremely strong. The unsold inventory, which was 1.5 lakh units, was much lower. The street was anticipating over 3 lakh units to come in only from Hero itself, and the management has said that they will be in a position to clear out most of the inventory except for the 12 to 15,000 units that will be there in Delhi because of the ban. They can't sell it. So they seem quite confident, the market liking it. A couple of positive brokerage notes also coming in. The other one was the one that you were just speaking about, JSPL. One large domestic fund is the active seller in JSPL. Remember, stocks don't fall 15-16% on retail sales. Obviously, it's some of the large funds that have been actually selling of JSPL. And finally, PVR is another counter which is again down in trade. Some of the large HNIs which held positions are squaring off the positions in PVR. Again, there is no clarity when the business will come in, and once even the theater starts, is there a movie pipeline that is there to support growth? So overall, there seems to be a bit of concern on how business will go in, at least for the next few months, and that is why a bit of exiting of such positions is being taken by JSPL at this point of time, or by PVR, sorry.
Okay, thanks a lot for that, Darshan. So that's what dealing rooms are recommending in the session today. And well, PVR and Anox are coming into conversation a number of times in the session today, I must say. Okay, now a quick question, Manav Chopra. I don't think we've spoken about the two-wheelers with you. Excuse me if we have, but if we haven't, Hero and Bajaj Auto are defying the downtrend today. Do you read something special in these charts?
Not really, Neeraj. In fact, we have seen series of downtrend in Bajaj Auto and Hero both, and importantly, even any bounce into these stocks are actually sold at higher levels. The short-term trend as well as the medium trend still is quite weak. A hint of positive divergence witnessed on both the charts, which could probably give a short-term bounce from the current levels, but I don't see that bounce playing for a larger move. It could just, for Bajaj Auto, I could, a short-term upside bounce could come close to the levels of 2150 or 2180 levels, and for Hero Moto, similar weak patterns is observed, another 4 to 5% bounce from the current levels. But actually, I would not recommend anyone getting or initiating long positions into these stocks. If one wants to initiate, should definitely maintain strict stop losses.
I must say some queer moves happening today. Edelweiss, for example, is up 5%, but even if you disregard that, M&M Financial is up about 3.5%. Karur Vysya Bank is up about 3%. Prestige Estates is the top gainer on the Nifty 200 with an 8% gain. So really remarkable going. The other one, and Anand Tandon, I just want to get your perspective here on the city gas distribution stocks. It's a business that on a relative basis might be slightly less impacted because of the slowdown, as because at least the cooking gas business is part is on. But I just wonder this price cut that has happened and the opportunity. At least one of the notes was suggesting that they may not pass on the entire cut to consumers, and therefore there is a margin expansion case there. Do you like these businesses, IGL, NGL, Gujarat Gas, for example?
Well, certainly city gas business is something that one should be looking at. Utility businesses in general. I think, even power utility is something like. But here again, as you mentioned, the demand is unlikely to revert too much. You have to be just careful about the gas distribution companies which have industrial clients, because some of those may find alternate fuels to be cheaper and therefore may shift demand. But those which are supplying directly only to consumers are unlikely to find any major downside. Of course, the ones which are supplying to fuel pumps will take a hit in the near term, but I am sure anyone who is looking to invest is not looking because of their next quarter numbers. And, certainly the valuations on a normalized basis have now become much better.
And then we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts.
Thank you, Karan.
Well, the last 5 minutes of trade left. So let's first get in quick closing strategies and then we'll wrap up the markets. Ruchit, I'll come to you first. Your top closing strategy.
I would recommend one buy call in HDFC AMC. We can see that in spite of the broader market correcting, the stock has managed to show some outperformance today. Also, in last few trading sessions, the good support has been formed around 2,1980 mark. So keeping a stop loss below that 2,000, HDFC AMC could be bought at current levels for a pullback move towards its 20 days exponential moving average, which is around 2,350.
Not Reliance Nippon Asset Management, Nippon Life AMC also is in the green. Manav, a quick closing strategy from you.
I'll go for a sell in Chola Finance. Basically, the NBFC space has continuously been witnessing selling pressure, and Chola Finance is one of the weak stocks at the current zone. It has reached important daily support and is likely to see further downside as the open interest data also suggests strong short build-ups. In that case, it's a sell with a stop loss of 148 for lower targets of 135. My other sell would be on Axis Bank. In fact, the stock has completed its corrective rally, and now, since it has breached its important support levels on the daily charts, this too could see a decline of another 4 to 5%. A stop loss of 363 on the upside for lower targets of 340.
Okay, let's start wrapping up the markets, viewers. Just about 2.5 minutes left, so let's make this quick. The market's not ending on the best of notes. You would argue that the Nifty Bank is off the lows of the day, but that's hardly a solace because it's still down about 5%. But banks are leading the charge downwards. Kotak Bank in particular down about 9%, but the likes of SBI, etc., are following close as well. Tech Mahindra though is down about 9.5% too. Axis Bank about 6.5%. IT and banking, the two biggest pockets, have corrected today. TCS and HCL Technologies as well are in the red. Bharti Airtel is now close to 420, so there is pain there too. And on the gaining side, surprise, surprise viewers, Bajaj Finance is in the green. I mean, it's a quality franchise, just that it's been beaten down so much. I'm a bit surprised today. And that and Hero MotoCorp and Bajaj Auto are the two names that have done okay. Navneet.
Neeraj, relatively a better day for the broader markets, I would call it, since the market breadth is even Steven, and you've got the mid-cap index, which is just about fallen by 2%, where you've got the frontline indices falling by about 4%. Even the small cap index is just down by about 2 to 2.5%. But still there were a lot of losers even in the broader market. So let me begin with the losers first. JSPL was down about nearly 14% today, recovering from the lower levels. We'll keenly watch out for the data which comes out who sold in today's market in terms of the fall that we've seen for JSPL. Well, you had PVR. We've been discussing the stock down 11%. Escorts also down about 10% in trade. Then you had Mindtree, which fell by about 9%. Remember, even the ID companies came under pressure. Even the large caps, the Nifty constituents, Tech Mahindra, TCS, Infy, all of them were down today. And of course, you've got CET, which was down about 7%. I remember CET yesterday, the last half an hour of trade was locked in upper circuit with gains of 20%. TVS Motors was down almost 7% in trade, while on the gaining side, just want to highlight, these are smaller companies, but some rise stocks were locked in upper circuit. You had something like LT Foods and also KRBL. Both the stocks were up and about. They were up about 10% in trade. Then you had Suprajit Engineering. We highlighted the stock in the Fab4 segment, up about 10%. Soba was up about 7%. Yes Bank had a better session when you had other marquee banks falling in trade. Yes Bank rose about 7% in trade. Jubilant Life also had a good session. And one stock I want to highlight is Godrej Consumer. I think throughout the session, the stock was maintaining the gains even when the markets turned weak. So Godrej Consumer up about 5 to 6% in today's session. But Davina, what about the contributors list? If you look at the fall of 4%, and what contributed on the downside among the Nifty constituents?
Well, banks and IT, Navneet, it looks like that's where much of the pain is coming in from. And the worst performer on the downside is Kotak Mahindra Bank. That's giving up about 37 points. Following that is Infosys, 35 points shaved off. HDFC Bank, too, at 829, is contributed 34 points on the downside. TCS and Reliance, too. So the top 5 names have all your heavyweight causing the drag on the index. On the upside, just 4 stocks that closed in the green. They were the only ones that contributed in any shape and form, but that too marginally if you to convert them into points. So nothing material out there to talk about. But the breadth of the market almost flat by the end of the trading session. So at an even keel, there are no major indications. 789 stocks advanced, 749 stocks take the plunge. But getting in closing comments then from our technical experts as well. Ruchit, let me come to you first on what is it? Tomorrow's a holiday, so we don't have markets open. Come Friday, what is it that you'll be watching up?
Initially, 8,100 to 8,000 would be the support range that should be watched out on Friday, because in last 4 or 5 trading sessions we have consolidated in a broad range in which 8,000 is the support. Even if you look at some of the derivatives data, then if 8,000 gets breached, then the next options where there is a good amount of open interest built is directly at 7,500. So 8,100, 8,000 would be the crucial support, and if you breach that, then I think the banking space specifically, which has been showing some underperformance since last few days, that would be the space which would drag the indexes lower. Whereas on the high side, 8,700 is the resistance to watch out for. So one can say that 8,000 to 8,700, this is a 700-point range for the market. Whichever side the breakout comes, the next directional move could be anticipated then.
Manav Chopra, what about you?
See, the markets today has witnessed a weak closing, especially on the Bank Nifty. It has breached its previous 2 days lows. And this definitely indicates that on the upside, the resistance of 18,500 to 18,700 would act as a very strict session amount of interest built up, a good amount of for MSCI to at the levels of 19,000. So I sense on the immediate basis we would be heading lower, would test the levels of 17,500 to 17,000 levels. So for the near term, I think the PSU banks, the NBFCs and the financials would continue to witness selling pressure on the rise.
Gentlemen, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts, and stay safe. That's Manav as well as Ruchit with their thoughts. Now, just before we wrap up, a couple of interesting thoughts that came in from 2 global brokerages. Credit Suisse and Nilkan Mishra believes that the Nifty EPS has been pushed back by at least 9 months. He says, of course, that India's PE premium to world and emerging markets appears to be near decade lows, but India's EPS may fall more. FI outflows from EMs are at all-time lows, indicating a trading pause, but the market is no longer expensive, but runs a meaningful risk of getting cheaper still. So nobody's probably arguing that the markets are no longer as expensive as they were, but who knows, they could get cheaper. Mahesh Nandurkar of Jefferies believes that, and I'll quote what he's saying, he says that we continue to believe that a large government fiscal response is in the cards. This, along with the slow pace of COVID in India, raises the probability that the slowdown in India may not be as deep as in the Western world. And he likes large private financials, select consumer discretionary, which appear attractive to Jefferies. So not common views, really, different views from both the experts. You never know what would be right, and both seem plausible. That's the best part about it. So make your own conviction and try and buy when you deem fit. But we'll try and keep on getting you more opinion during the course of the week and the days ahead as well. For now, from all of us who put this show together, thank you so much for tuning in to Countdown. Stay safe and have a good week ahead.
According to a recent report, women today contribute nearly